Hiya, everyone. It is January the 20th. And did the bears come out today out of the woods, huh? So here we've met a Johnny, and as we said yesterday, make sure you smash that like button and subscribe button so you know when we're doing our little talks here. But it's been really a wonderful month or so of just technically perfect for a lot of what we do, the Nova Wave and reading the crowd and stuff like that. And as you know, yesterday was a textbook example where it went back and tested the breakdown levels, and today was much the same. We saw weakness, and then it accelerated with Peloton. Now, people think that's a bit of a laugh that, oh, no, BS all over Twitter, all that. Well, it's not a joke, because it's all about sentiment, and that reminded everyone of the crap that they owned and the trash and all this. And this is the epitome, a lot of that. You saw a lot of those rubbishy stocks that they were buying just get crumbled after this. And then after hours, Netflix reminded them again. And this is a company that's a good company, had really good earnings. I'll just tell you what they were. The QE EPS was 133 versus 81. Revenue, however, was expected, but it was still a massive 7.71 billion. Their streaming paid, which is everyone looks at, was 8.28 million, up from 813 million. And here's what hit the fan on that one. The EPS for Q1 was expected to be $3.37 a share. It was $2.86. So that's a good 50 cents lower. And the Q1 revenue, they're putting down at $7.90. And they was expected to be 8.12. Now, full disclosure, that's just the pure numbers. I have not read through the whole report, and I have not listened to podcasts. We've been trading, and it's been a really nice session after hours as well, and we're going to go through that. So, Johnny, shall we begin, my friend?
We shall.
Yes, shall we do? Now, our dear friend Madavi, in true bear fashion, he's having a bit of a snooze now, and he does sound like bears on that picnic, so we won't have you listen to him snoring. But a great day over here in the mateverse. So let's start off with, we'll go quickly through what's happened. Oil had another strong day. It's obviously a good $2 off its high. We did have the EIA report today. We did do the rollover yesterday from Feb to Mars. So that, don't forget that little factor into it. As far as the SPOOs, went from down to up. Russell the same, Nasdaq the same, just wrecked. As far as Natty goes, continued down beautifully. That's been a beautiful trade as well. So if you're a clinical trader using pretty much Nova Wave and things resembling that, you should have had a great couple of days. So it's been beautiful, really, hasn't it, mate? So, and actually, there's been some good longs on the stock market. It hasn't all been one trade, obviously not this trading, but I know there's been a couple. Do you want to talk about a couple of those before we get into the doom and gloom of the mighty SPOOs? Johnny? I know that I'll leave that up there for everyone to look at. So I remember Tesla was a good little buy this morning.
I started out the day actually with SoFi.
Oh, SoFi, that's right. Yep.
Yeah, SoFi was curious.
So I lost you there, mate. You there? So Johnny, I don't hear you. I think Johnny's been having a little bit of trouble with his headphones.
Can you hear me?
I hear you now, but I didn't hear you. You said SoFi, and then we lost you.
Oh, SoFi. I'm sorry. Yeah, so the SoFi had that announcement last night when the bell closed about the national banking contract they got. So it had momentum last night, and then it carried through. And this morning I caught an upside of that by got out a little bit short. I wrote it up to about 1480, and I think it went up to almost 16. So I was thinking that it was gonna hit a kind of a ceiling about that $15 mark because of just it's
Yeah, there's a lot of optionality up there, and it was actually plus 2/8 under our system, so it was actually a good, nice sell up there. So you had, just to remind everyone, SoFi was one that we've been watching for a week or so now. They got their national banking license from one of their takeovers, and they were like $8, and they came on. Well, we got to go back a little bit further than maybe daily chart. They were a lot lower. Not $8. What were they at? $12. Sorry. And then they opened up on that news. That was this one. And then there was additional news yesterday. No, last night, wasn't it, mate? Yeah, on getting that banking deal. So that traded up perfectly here. And as we just said on the 5-minute, which is the one you trade off this fast money stuff. So it's not all doom and gloom. So, the mixture of, personally, I tend to focus more on commodities and futures. But there are these nice little stock plays that we do.
And with the market being hot this morning, I also started playing with Apple and made some money there, but it just wasn't moving enough. So I diverted and went to Roblox. And Roblox had a little pump, and then it sank.
Yeah, and everything fell apart. And what we're going to talk about with the market hitting those levels, you'll see, and how it all relates. And Apple was just a beautiful one for this. That was and what happens when vol gets cheap? I mean, it's not as cheap as some of you are used to, but it got back in the low 20s there. You're able to buy puts for next to nothing, and so which is a safe way of trading that. If you're not so inclined, if you're not doing futures, and if you are hedging your portfolio, that's something that's very important, and don't forget that. So let's move along to our S&P. So S&P on a weekly basis, we opined yesterday the significance of this weekly, this pink line of the Cajun, right? So that's this line here. Whoops, I went the wrong way for you. So that's this pink line here. So we opened and we held that, and we got a nice pump up to this testing the trend line. Again, a nice sell. So we did a little bit of put buying and shorting. And if we move on to daily, so there's no guesswork going on. We're pretty clinical. You're not going to see us bullish up here and bearish there like all the dribblers out there. So we don't. There's no fear of missing out, and that's an important thing. And you don't want to get your ego into play. But in reality, here's what happened. We got up, we opened, and we went all the way to that Tenkan and tested that trend line, and we just saw it in the weekly. I mean, this is I mean, you're not going to get this too often, punters. But you've got 2 days in a row of the same perfect sell. Remember this morning I said, wouldn't it be interesting if this thing went red today? Remember that? Half believing it, but I'm looking at maths. Look what we tested in the after hours. This breakup right here. 5/8 from a 1/8 spit, almost 2/8. Remember what that means. That's almost a 6/8 move, but the significant is it did 4/8 from this break here. So just clinical stuff, right? So you're combining it. We broke this, so we went up here, tested the Tenkan, the break, and that's also the top of that cloud, right? Give or take a bit on the cloud, but pretty well perfect. If we go to 240, the 4 hours, which is your money shot here, look at this. This is today here, right? This is what, when we did this 7/8, look what we did here. We went up. See how this all works together? So it actually gets there, tests all this, hits the Cajun. The Cajun's flat. Remember what all that means? And then boom. And this has gone, you never know how far it's going to go in a bull or bear market. But just remember this, things tend to go more than what's expected, right? So, and after hours, we got down here. We just kept selling on panic. The Netflix, last time I looked, was down like massive, right? So, these are real moves on real companies that are also impacting. Peloton's a different kettle of fish. They don't make money. They're having trouble. They got McKinsey's in yesterday. But it was already, and it still managed to go down. So, and that was one of the ultimate dribbler stocks, right? There's all those upstarts, all these software companies. I mean, the Peloton, I always get them mixed up. Peloton, what's it called? Palantir. All these different ones that don't make money, or if they do, it's from some accounting adjustment. But tons of shares. And so there's a common theme with a lot of this, right? Some are obviously better than other. If we look back at all these tech bubbles with no burst, there's always some phoenixes come out of it. But, that's not my game, so I'm not even going to try to go in that world, right? So we're looking at them, we work down to the hourly, and here, again, you can see this. If you want confirmation, multiple confirmation, but your Elliott Wave, ABC, I mean, it's all there if you're disciplined enough and just trade a few and don't get into the hope. What's really difficult is if you've only been in a bear market, you only think of buying the dip, the BTFD trade, right? That's fine, it worked, but you got to look at, okay, why is it stalling and all that? Just don't assume, like these people that average is why I don't average, right? Is that one of my pet aversions, Johnny? Because when it goes wrong, it's just brutal. We're all going to be wrong. But you don't want to be magnifying your loss, and that's what happens. It's all right to lose on 1,000 shares, but when it's 10,000 shares, trying to make it normal, or 20 contracts instead of 2 contracts. So there's difference from accumulating a position than just averaging a bad position. And a lot of people's investments were trades gone wrong, or they were based on thinking they were the second coming, when they got long with that whole massive run that was 2 years ago, right? And therefore they knew it all. So it's like me saying, I know how to take out your appendix because I read it in a bloody book and I practiced on a hamster at high school, right?
I got caught on it holding AMD. AMD got a downgrade or a price.
Oh, yeah. So the unexpected. So you expect the unexpected. So these analysts, remember, they're not bloody traders. They're analysts for a reason, right? They're usually upgrading at the top, downgrading at the bottom. And people make fun of people that were downgrading or taking profit on some of this crap over the last 6 months. But they're not it's not their ego. It's not keeping up with the Joneses. That's their job of getting you out at good levels. And good bankers were doing that, I'm not going to mention their names, but one that Johnny knows that I'm with, they've been very, very bloody good. And the market out there hates them. And they think it's some conspiracy. No, it's common sense and not being too greedy. So look at that. That's spot on. They're nice trading. And 5 minutes. So this is if it gives you an idea how we do, and this is what you're going to see at the good shops, right? We're not out there selling your stuff or anything, it's just simple logic, right? And so we didn't even get to, so this recalculated down. This was actually plus 2/8 in the 5 minute. And remember how Murray will recalculate periods back. And this is your favorite thing is the Chico, right, Johnny?
Yeah.
And it's very similar to that, right?
That's a mirror. It's just behind.
Yeah,
It gives you a more clear picture.
The recalc will do that. It's telling you, man, this is more in it. And so that'll keep you honest. So basically, if you're hitting, just think about this. If you're watching your order flow, you're watching your Murray math, and it's not, and our friend, our checkmate was in earlier. One day I'll be able to talk him into coming live, but he doesn't want to right now. But he made a very good point. So when it's hitting these Murray levels, minus 2/8, minus 4/8, and it's not bouncing, you know you're in trouble. And that's where a recalc is there. So you didn't just hold and hope, So you combine all this is the point we're trying to make, right? And so you got this this tank can come through here. And here's where all trouble we got back through here, and you had this false little break. And this is all around Peloton. So Peloton, it was just a reason, and it came into thin day, but it reminded the people, right? So we say, and we classify the investors and the traders, and then the punters and the dribblers. So that's your 4 groupings of people, right? And I just got a message from the Bear Cave that someone's come out of hibernation. So let's just welcome the bear coming out of hibernation. Welcome, Madavi, or should we call you Yogi today?
No, that was my phone and auto trading going on.
Oh, he may not even.
I don't know. We heard Winnie the Pooh looking for the honey pot there.
I told Johnny all you had to do was just short Peloton.
He's licking his wounds or something.
Sleep.
He trades all night. The futures.
How to auto trade. That was the lessons of the day.
Right.
Crazy
well, what a beautiful day. Remember today I said, imagine if this goes red today. Remember that?
No.
So this is one of those great days, you know. So.
Well, it's been going red every time, right?
Yeah,
I didn't think it would go today.
We both started the day, just Madavi and I, thinking that it was going to be an easy, almost like a present day, you know, that everything was going to fall on our laps. And it turned out to be quite different. That Peloton, it just really...
Well, it was already going down at that point, like Murray, but that just hit it. And then Netflix after hours just, you know.
Yeah.
And so let's look where we are. Let's go back to that weekly. And when that weekly went, that's when you were chopping down trees there, Madavi.
No, that was the auto trade to show Johnny how to do it.
Well, that's true. We did, as a group, we did partake in a little Peloton shorting, and so there, and we were confident of that.
I knew what I had to do.
Right.
I put on my auto trade, and I go this one.
Is he on? I can't hear him.
Go.
Yeah, Madavi's talking. You don't hear him?
No, I don't hear him.
Yeah.
I'm not sure he does. Did you? You might have him muted.
My volume's up.
Here's one that's important. There's times where the market will
keep
give
going. I'll go ahead.
Well, you know, all jokes aside, that was a pretty solid meeting. You should. There's a time where you can have a trailing stop on, and that's what Madavi's talking about. Peloton, when the trade's working, and you let it work.
At what time you should step it really up.
I got off of
yeah. But anyway, let's get back on to where we were, and because we've been talking about Peloton, but so we just went through the S&P. Now the Nasdaq was really brutal, and after hours it just accelerated. So let's look at we'll go back to where we were, mate. So the Nasdaq. Well, let me just compare this to show you what we're actually talking about. So the S&P 50. This is just a simple 50 moving average. On the weekly, it's quite a ways away. Look, to give you an idea how weaker the Nasdaq is than the S&P, just look at this. So this is its last hope, basically. Right now, Madame. So after you slept, it broke down, and then after hours, Netflix warned their next quarter. They beat heavily this quarter, and they warned. And so we're down testing the 50, right? See that, mate? So if this breaks, and we were Checkmate was in earlier, and we were going through it. If this breaks, there's nothing till this line here, which was the lows from October. You hear us, Johnny? Do you hear me and Madavi?
Yeah. I logged off.
Yeah, so that's right at 2.8. If it breaks this, we have nothing till 0.8s and minus 2.8. That gives you an idea if this all gets out of control. And really, is it out of control? We went up so far out of control, no one wants to mention that, right, Madavi? They just talk about... And you've been dead right on this. You've been calling, mate, for this. Since this broke and people trading the future and the readjustment and people feeding on their losses, that this would happen, right?
Well, this is my type of market. This is what I'm used to. You know, these are the type of markets where, you know, some people do the bull markets we had. You know, I'm a bear at heart, and this is where I thrive because I can recognize opportunities. And when I recognize opportunities, I jump on it, and I try to jump on it with everything.
Right. Well, it's unfortunate. So you missed Roman traded. I mean, the checkmate traded with us in the last bit there, and you know that. So all three of us we've been mates for a long, long time, and we grew up with in the futures world, the currency world, and been through some good bear markets between all three of us. So we recognise things go down. What can be difficult, was when they go up way too far. So we usually don't. We're not going to lie and sit here. We bought bloody Upstart at $200 and sold at $400. That's not what we do, right? And there's a reason why. We know how it's going to go. But you just don't know when. That's the big if, the timing of it all. So you wait, you have a system, and that's what Madavi's talking about. When it happens, you jump on it, and we're kind of having a bit of a laugh about Peloton, but what I want you to get out of what Madavi said is when it's that opportunity, that's when you jump on it, right? And you might upsize it and stuff like that, right, mate? So, and for me, because I'm more of I love the options, it's been a gift. Some of the stuff, and a buddy I was talking to earlier, was worth nothing. Literally 10 hours ago. No, I lied. 4 hours ago. 5 hours ago. So that's how far that went. Now think of the other side of that. The bloke that's selling you those puts for a little bit of premium just got wrecked, right? So now the smart, so the smart operator will cover that Vega. Remember I said, forget all the crap, the fancy words. And this is the real world, not the. We don't trade vol specifically like that. So you forget the shammer and all the other words. You just want to know Vega or Delta, and you want to know Theta. And that's your pure risk, your unadulterated risk. So the big hedgies, that's what they use. They're not going to use VAR. They're going to do that, Sharma and all. Because when it's what matters when the worst thing happens. Remember when I said you trade like a footballer? A good footballer that's going to earn an NFL or an NRL contract. NFL's a little bit different because you're specific positions. But NRL, you got to have good defense. And a good trader needs to have the same thing, right? And you also got to know when to attack. So, and that's exactly what we're talking about. It sounds simple. And you know it is simple because you got to control your biggest weakness. And what's your biggest weakness? What's your biggest weakness, Johnny? Every human's and every trader.
Greed and
fear.
Yeah, greed
and fear.
Yourself, right? So your human frailty. We could rattle off blokes that we see all the time that are on CNBC or bloody the FinTwits and all these different things that they never lose money or they're always at the top bottom. Well, that's all bull, as we know, but the common thing is the human frailty when they'll get upset and their ego and they want to prove that they did this and that. So that's what you need to control. And you control that, then like Madavi, he reads, I think we see Peloton hitting lows or something, and you saw what it was, cut, boom. Instantly, it's just knowing how to react and that, and not worrying about being wrong or right. To be right or wrong. Does that make sense? You're a trader.
Yeah, and I'll give you a perfect example. I got in on that late, and I still went because the momentum was going so fast. By the time I got in, it went down, and then it bounced back up, and I was way short when the stock bounced back the other direction, and it scared the crap out of me because you don't ever know, and when something like that event, how high it can actually go the other direction. So if you just stay patient and you have conviction in it, it went back down and I made money. So, but it did stress me out.
More.
Right. And so what I took out of that, being more the futures and the commodity guy, I gave him, you know what? they're going to realize all the crap they got. Remember I said that? I bet. And you said this is starting to hurt the market. And I said, yeah, they're going to realize it. And then I just went out and gave everything at that point.
Well, that was the turnaround in the market. As soon as that happened, I was short stuff, and the whole market just went from going bulls to bearish.
Yeah, because their sentiment, they reminded anyone that owned a lot of this stuff. Well, it pulled the bid on a lot of stuff too, right? It pulled the bid on.
Well, this was the darling of the.
I mean, all that sort of stuff, right? That the companies relied on arms or whatever it is, that buy now later crap. You know, I mean, come on. and we now and at the same time, remember what I said yesterday? People misunderstand the bloody bond market. But bonds. It's not. It's about different vehicles of investment. It's also about fear and safety. And it's not just about interest rate of funding growth. I always had a problem with this whole growth versus stuff. To me, a lot of that is just a BS excuse to justify the crap that they owned. Those peeps, right?
You're talking about the Cathie Wood ARC fund? Is that?
No, I'm not, Steve. At least she has the rationale. I mean, all these, there's growth value, and they compare it to another piece of crap. It's like, if I'm walking the dogs in the park, I'm going to be a little bit crude here, but if I'm walking Machu Picchu, Luna, and buddy Harvey in the park, right? Well, some of them are a little bit sharper than the other. But if I walk them down, and I'm saying, well, that's a good crap there from Pichu. That's a good one from Machu. And Freddie's walking his dogs over there. It's all crap, right? That's the bloody stock market that they were buying in all that stuff, right?
And one thing you guys got to keep in mind, these guys from Peloton, they're all billionaires now. They all sold out in the hundreds and tens. Go look at the
yeah.
You guys are all
talking about
billionaires.
Peloton and Palantir.
Similarly, right? But Peloton, and a lot of these other stocks, you know. But by the way, Johnny, you wanted me to bring the 4 dogs in. There you go. Was that what you were talking about?
Well, the thing that you don't see very often is in super speed. I mean, this was a darling 6 months ago to maybe it's going to go bankrupt.
Yeah, and they'll push it. The market will push it because here's the thing, right? If we've been around and that's our job and you've had all this, you're doing how I'm making all this money, blah, blah, blah. And we're like, damn. But, we don't really care. What really matters is what you do, not what the bloke down the road. And the quicker you learn that in life or whatever, and the trading is, it's not life or death, but it's a brutal way of bringing home the bacon. You can be dead right and lose money. You can be dead wrong and make money. There's the gamble aspect about it. You got to be wary of that. That's not telling you you're doing the right thing. But and that's exactly it, right? Look how fast it turns, mate.
Well, look at AMD. AMD, great stock.
This market has changed over the last year that I was so confused. Because if there was bad news, it was good news. And stocks would keep going up. And it just made me baffled. I just did not understand it. I think we're getting back to normal markets again because I did not understand the last 3 years. I mean, airlines don't fly, but they go up. These things just, companies are out, no one's working, they still go up. It made no sense to me.
Further to that, what really doesn't make sense, when that baby tiger blew up, remember all those stocks and the guy lost 10 billion? That should have been a warning to everyone. But they made fun of the guy losing. That's where the market was at that point. And it was criminal what really went on, the way they all connived and smashed it. It's criminal that they let all that craziness go on. But they wanted to ignore it. Like, that's the phase that we were in, right? And they want to blame, they don't even talk about that. They just go on about the meme stocks and all this. Because it's just like the politicians, right? We're going on about Russia invading Ukraine and that's all going to happen. But they're only going to the area that was the Russian that's been a civil war forever anyway, if they're going to go in, right? And it's their border, but it's a massive redirection. Just like the market, it's a massive redirection. And so you couldn't tell anyone that maybe this is a little bit unstable, right? And then you got to be wary of, get into the phase where if you just short something, you're going to make money either. This is a market that goes both ways, and that's why we look at different aspects of it, right? And look, here's what I'm seriously thinking of doing. And we talked about this the other day, and people laugh, and I laughed at some bloke that runs a system out there that GAN, ha ha ha. It's all about understanding what's going on. I can sit here and teach you how to use Elliott Wave or how to use bloody GAN or Ichimoku. Madavi can sit here and teach you how to read a market maker box and an order flow. But guess what? 85% of you, at least, this is GAN's numbers, proven. 85% of you your egos are going to be there. You're just going to want to prove wrong. That's wrong, or you're better. That's your danger. What you really need to do is understand yourself and mental and strength and how to come back from adversity and loss. That's the most important thing. So where we're probably going to go with this podcast, I've had a interesting life myself. Unfortunately, I know a lot of people that have been through that, just trading through sports or whatever. That's what you need to know. And then you'll understand everything we're talking about here, right, Madavi?
Yeah.
Because that's in a nutshell what Peloton bloody was. People went making money. They fell in love with it for a $5,000 bloody bike, right?
$500 right now.
Mate, we should buy eBay shares because they're going to make a lot of money on selling them. But all jokes aside, be wary of the herd. Be wary that these people actually care about you, etc. They don't. You've got to worry about yourself. And Peloton is an epitome of that. And the Baby Tiger was an epitome of that. And there's so many other stocks we could probably go on and on. Like we were looking when Checkmate was in earlier, Madavi, they were hitting 52 lows, all these big names, right? The big names that we all know. The MSOF was going through 300. But there was all those ones like the BKKTs. Remember them? Like $50. The PEV or whatever. What was that one, Johnny? It's like $5. I mean, these things have lost 90% of their value.
So here's the greatest part, right? So if this happened last year, Peloton probably go up to $200.
Yeah, 100% on margin money.
Going out of business, and people bought it. They went up to $500. I couldn't believe it. It was unheard of. The company has gone bankrupt. I mean, literally went up to $500. Movie theaters that were going bankrupt were going up.
Yeah. And here's I'll tell you, everyone makes fun of the AMC guy because he didn't have pants on in a bloody YouTube video or something. Oh. Who really cares? Do you think he cares?
No.
What he cares is, you know what, boys? This crap wasn't worth that, and I flogged all these shares out there. Like, legally, he did all the secondaries. That's his job, and he played it. GME, do you think they care? What was it, Madavi? $200? They raised all that money. They got money. Good to go. The smart operators, they did that. Elon Musk, he's a bloody crook, he's this, he's that. What I see, look, he's South African, so, you know, so we got to be wary with their cricket and rugby, all jokes aside, but that guy had wise enough and not too greedy to, you know what, I need to raise money for when it hits the fan, because he's been through there. Remember, he's nearly gone under multiple times, right? He raises all those billions of dollars as it goes up. That's smart operators. People say, they're doing the wrong thing by the stock market. No, by the stockholder. No, they're not. They're keeping the company going by raising money. Then we get other stories of blokes just flogging their shares without even giving them a chance. A lot of these tech companies and stuff.
Oh,
right?
Yeah, like Palantir.
Yeah, I mean, this sort of stuff, right? Yeah, and people defend that. I mean,
the company loses money. The CEO takes $1 billion out for himself on a losing company. Hey, let me tell you, if that's a stock you want to invest in, I would short it and stay short.
I mean, that's the things you want to stand back and look. In other words, don't fall in love with a bloody stock, because the stock ain't going to love you. You're going to have wives that leave you that don't love you, girlfriends, boyfriends, whatever. I mean, it's just the nature of it, right?
Years.
What's that song? All my exes live in Texas. Anyway, we digress. But any jokes aside, we're just trying to get in the mindset. This is all mental. At the end of the day, you got to have that controlled, right? You know, or it doesn't.
And
really...
I might want to interject one thing real quick. And I know we're going to have a different podcast about this, but being aware of what's going on with money, where money's coming, going, and all the things that really helped propel market to support it and prop it up. So these the companies we're talking about, like these run-up companies, you know, $30 in a day, and then the next day they're worth nothing. You know, there was a lot of things happening with the injection of money into the market, and now there was a taper panic, or the taper tantrum back in, when Bernanke did it back in 2007, and now people here, they're tapering, and there's a lot of things that you just need to be aware of, and we're going to get into that later, guys. But I think coming in as a new guy, just me looking to see what has happened in the past is going to happen in the future, and you got to look for the new things that are coming along with it. So I know all these things that you guys are talking about, but I would say having good habits and doing these things and having control over your human behavior, controlling all that is really important. But I think also just knowing what the hell is going on in the world is really important too.
Keep your eyes open. Yeah, because history repeats, right? But in a different guise. Like people like to put bloody buzzwords and to justify it, like, oh, this is the Industrial Revolution number 4 and all this sort of stuff. It's still, at the end of the day, there's a value. At the end of the day, you're a trader. You're an investor. There's a reason why we call people dribblers and punters and traders and investors. Go think through that and what that all means. Because at the end of the day, you got to be in at the right level and you recognise it. So what John is talking about exactly, I think Madavi even used this term today, you got to be like a cobra, right? And know when to strike. So some of this stuff that's getting destroyed will be value. And it's whether a company that's smart, like some of those ones we mentioned that raise money and pounce on them, right? Like you saw the other day, Microsoft took the opportunity to buy Activision because Activision's getting pounded for other reasons, not just the market. They got the sexual harassment, and they're willing to put $3 billion up, right, if they don't do it, Madavi. So they wait. A smart operator waits and waits and waits, and that's what a trader is, right? And you're not always going to be right, so prepare to take losses. But the point is, you want to give yourself the best chance of living and surviving. It's buying a stock worth $20 for $400 isn't the way to do it. Just so you can share in the rush of it. Mania. That's gambling versus trading, right? Who cares if you miss out, right?
So basically, the last 3 years was Disneyland. I don't think we're going to see crazy stuff. I think we're going to get back to normal.
Yeah, and that's what happens. It's called a rinse. In the commodity world, we call it a rinse when the rubber meets the road, right? I mean, and it gets overdone. Remember when oil went negative? That was just the real reason they went negative is because the whole Bank of China didn't do their limits and it had caused the CME, blah, blah, blah. There's all that, plus other stuff. We all know fundamentalists work.
I was going out there asking about AMC. How is it going to go 200?
Yeah.
I'm like, what?
So, if it does, like I've been fortunate every now and then, we've all had these fortunate trades where you just happen to be the right place at the right time. But that's luck. Like, there's a couple we won't talk about publicly.
Yeah, you're unlucky 8 times of the one time you're lucky.
Yeah. It's like that one time at band camp, right? But anyway.
My big decision today is am I going to sell any of my Peloton or I'm going to hold it all?
Oh, that great investment when you bought them at 102? You're averaging down? No, I'm joking. But there's a lot of that, right? Because it worked. Until it doesn't. And that's the thing.
That destroyed because of that.
Yeah. And it's the margin calls. And don't forget, when interest goes up, when the Federal Reserve raises interest rates, all that goes up in price too. You don't think that your Schwab or your E-Trade or whoever you're with isn't going to whack you another quarter or half on you? Of course they are. Why wouldn't they? They don't. Well, that's their job. I mean, they're not nice, you know.
Yeah, but the Fed lowers the interest rate so corporations could borrow money and hire people and expand the economy. And then what do? They buy back their stock. There's all these things that are happening.
Yeah, and a lot of people, to me, that was wrong. Oh no, but that's that because people got greedy. They just think of the stock as a gambling instrument rather than it's meant to be a living representative, a part of the economy. If you're a capitalist, that's what it is. The capitalist all of a sudden became a bloody just a spruiker, right? Oh, let's make as much money as we can. To hell with the risk, I mean, there's all these different things. We get it taking off the market if there's no other thing. But back in the day, what would happen if a company couldn't use that money to expand or pay their workers more? Oh, wouldn't that be a novel act, right? Instead of paying the CEO through stops, they would do a special dividend and give it back to their shareholders, right? What's that?
The biggest thing that happens is it creates an income inequality because then people who have the money and that are doing these things don't hire the people, and there's or
pay them a proper
or
wage.
Pay them away. Yeah. So it's creating a really bad situation. That's probably why Biden's trying to make everything so.
Yeah, but
Biden's coming
going on for thousands of years. So it's never going to change, no matter what they do.
Right, and so if you enable that, when you enable lobbying, so lobbying's enabled in America. So if you're a Republican or Democrat politician running for Congress or Senate, you're competing with that. I mean, that's a whole different discussion of what's right and wrong. But anyway, and everyone has their own views. But we're just talking when all that money goes into that, it's not used elsewhere. So it's like. Obviously, we specialise a lot in oil and gas. So because they haven't been spending that money, at least they weren't buying their bloody stock back. There might have been the odd one, right? The made one, but they would try to maintain their dividends, the big guys like Chevron and Exxon. But what these people weren't doing is putting money back in to increase production, make it more efficient. Or, lo and behold, on renewable energy, who's your most perfect person, right? And we have a person that... Raskin's a name, going up for the Fed, that's the one that's getting a bit of noise. Biden's putting up 3. This is the one that people are weary about because she said you shouldn't give money in 2020. No money should go to the fossil fuel industry. Right? They're all getting crushed. Oil went to 0, natural gas to nothing. And now they're all getting accused by exactly the same people of corruption because oil and gas is up here because they can't produce. Well, you can't produce if you can't do it. I mean, that's the world we're living in, and that's your leadership. It's astonishing, really, that it's so bloody obvious.
When they taper and rates go up and it costs too much money to borrow, and the way that's going to affect corporations and play that out.
You made a very good point. They should have been. They could have kept their money for the rainy day, which the smart ones did, right? So, but when it comes to the some of these companies, they weren't even allowed to borrow. That was the point I was trying to make there. But it's always someone else's fault with these politicians, and there's sheep or the partisan politics. They fall for that nonsense, right? Because it's like if I'm we're in Houston.
Winners and losers.
Yeah, so if you follow the Texans, they're going to bloody lose, right? But say I'm a team that's usually winning, like that has a big following. I don't know, Cowboys versus the Niners. Say they're storied franchises. So just make one of them the Democrats and one the Republicans. They just blindly follow whatever they say. And so that goes through their policies, and the same thing goes into companies. You get people that, Tesla we talked about. They either love Tesla or hate it. They don't want it. They love Apple. They hate Apple. They don't think of them logically. And that same thing happens with ESG companies versus oil and gas. It's just common sense. And that should come through in your investing, should come through in your trading. And if you apply common sense to your brain, your mental capacity to think on your own. And so what's the point of learning just blindly following someone's system and not understanding it? Or not understanding what... The whole reason we started Nova Wave and all this trades community, all this stuff years ago, and we used it was to help our own trading. Because we knew where our weaknesses was ourselves. But we also knew that some of these blokes that come up with these systems and make a lot of money and live a good life were some of these guys we incorporated into what we thought. Like the guy who came up with Ichimoku was a broker in Japan back in the 40s. He saw something in it. Gann, these guys, Ty Murray. There's real people behind all this, and we took the time to learn what made them tick and what was they were wrong and right, and we know where we're wrong. If you're a good trader, you know your biggest weakness is being too competitive and fighting those things. So they're the strengths, right? So you got to have that to start with. It's not just following someone or stealing off someone or blah, 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 right? So that's what you want to work out. And that's kind of where we want to go eventually with this thing. You know, either we chunk it or we do that, right, guys? You know? Yeah. But it's
reminds me
helping
one day,
others.
This will make you laugh a bit because, I've always heard about rugby, never really watched it. It's not a real big game.
It's character building, mate. It's character building.
So what happened was I was at a restaurant at the bar with my wife and some friends, and there was this game on, and the game was like incredible, fast paced. These guys were just really giving their all, and I didn't know what the hell was going on with the game. I didn't know how you score. I didn't know how you got penalized. And it's like our politicians, they don't even know a lot of the subjects that they're trying to have policies and different things that they're trying to create to protect everyday Joe,
Yeah. Everyday Joe doesn't get a look in,
They're supposed to represent the people, and they just don't even know sport. The guys that are in charge of oil and gas, most of them, they don't understand.
Well, the difference, here's what I will say about the oil and gas industry. Nearly all of them that get to the top have come from the bottom, right? I mean, they might have been I don't mean bottom as in cleaning the streets, but they're an engineer at some point, a geologist. So they've done the hard yard. It's like the guy who runs a building company generally is being a carpenter or a plumber. So in an oil and gas company, generally they do understand. And they've been boom and
the
bust.
Politicians, though? Do the
politicians know? They have no idea, but they know.
That's the referee.
Yeah. Don't get me started about referees.
That would be me as a referee at a rugby game. I would be a
one of the few times I got sent off was for saying things to a referee. So I have a bad opinion about him. You probably got an idea what I called him, but I just can't say that on this. But yeah, at the end of the day, anyway, it's about mind and the stuff we read. These red lines, like Marby made a point, or was it? It might have been Checkmate. So when he was in, we were looking at this daily. I think it was the weekly. Yeah, the weekly on this NASDAQ, and look at this big red bar. We've had 2 out of 3 back-to-back weeks. Now, mentally, if you're okay and you've seen a bear, you kind of know what this green one was, right, Madavi? And you said it on this podcast, what it is. It's no one's seen it. It's calm before the storm. And, and we made a big point of particularly people, the thing that really grinds my gears is people that want to make an excuse. The ones who are telling you to buy up and they're looking for some so they all blame Powell over the minutes. The minutes was out 2 weeks before. It's just a reflection of 2 weeks before. And long before that were all the warnings, right? But the greed things can't go up forever. Now, this could turn out to be, and we were talking about this today before Madavi came on, not in the podcast, but we were discussing that overall, if this all goes to nonsense to try to bring down inflation, everything collapses, then people lose their job, the natural progression, then they got to print money again, interest goes down to 0, then you go back to new highs in stock markets, all this sort of stuff. That's kind of the play, right? How does it happen? What time? I mean, that's the kind of world we're living in, right? It's not sustainable. It's been going on since, well, at least since 2008. Some people would argue it's been going on since long-term capital. But at the end of the day, until the music stops or whatever point it does, and you get one of those movies, which we've, it's usually in black and white and it's the end of the world sort of stuff. But
And my belief in gold's coming right back.
Yeah. I was waiting for you in the queue in on that. It did come off today, though, mate. It did come off today.
I got out of cash. Mostly, I'm in gold. I just went into gold. I don't believe in cash. Hey, it's worked for 10,000 years. It's going to work for another 10.
I got a feeling we're not, unless there's a secret you're not telling me. Are we going to live for 10,000 years?
It don't matter. Maybe I'm going to load myself up in the meta world.
You could, yeah, with the cyber thing. So here's gold today. Gold had a monster day yesterday, and it gave back some today, but not a lot, right? So, and a lot of so you got bond. So we're getting more in, it'll change. So that's got how you want to watch how you react and the herd reacts. And that's why we're talking about politics with the whole sheeple thing. It's the herd, right? And that extrapolates into other things. You got people that hate capitalism, hate Republicans, hate libertarians, yet they're making all money on the stock market. And you got people the other way. I mean, so none of it makes sense. So don't try to work it out. Just try to work out what the herd does, follow the market, watch the money flow, and learn what those waves patterns mean. Anyway, here's gold and bonds. They've been doing this business. Safe haven, right? So how long look at this big move yesterday. Remember that, Madavi?
Oh, yeah.
That was, you liked it because you got, it filled your till up. Well,
but transferring over for the last 6 years.
Yeah, you don't stop. Yeah.
7, 8 years, 10
years. So we got this going on. We just heard from our brother Nick over there getting ready to fight. I don't know which side is he on. Is he on Putin's side or the Ukraine side?
Oh, he wants to go on Putin's side. He wants to win.
Yeah, he's from Belarus, so Belarus is probably on the Russian side, right? Not the Ukraine. But anyway, he said he'll be in tomorrow. So you sent me a message. That was that ding. He's probably loving the sound of the bear cave. He probably heard you come out of hibernation.
Oh, man.
But anyway, let's look at, so if we think about what's happened over the last 2 weeks on oil, so I mean stock market, so oil and gold and all these, so think of gold also becomes a safe haven for a lot of people too. So around that time, this is the 7th on gold, it had that spike down, remember, to like 1780 or something. Since then, it slowly creeped up and it had explosion. We're now up $60, $70 from that move. The same time, bonds, they're having the weakness with the interest rate, but they're also having some good auctions. So when you see that kind of dynamic, you know that people are also investing in gold and bonds. Just think safe haven. Normally, in a normal time, you'll pull up a currency and you'll see the same thing happening with the yen and the franc. But at the moment, the Swiss franc, that is, at this point, because of the interest rate thing going on in the forwards, that's also stimulating that. But you want to think more than just what's happening today. You want to have what's happening over the last 5 months, how it's evolving and moving forward, right? I know that's, if you're a tech stock, fast money stock, you're not thinking like that, and we kind of miss those swings up, but it's okay. But we're in survival mode right now. Here's crypto. I wanted to change the pace a little bit just so Johnny can talk about crypto. There's 2 things we wanted to look at, was Ethereum and Bitcoin, right? You there, John?
Yeah.
Yeah, so I got Ethereum daily up. I wanted to, if you could explain a little bit quickly to me and Madav and the listeners and viewers. So we got the daily on Ethereum. I noticed ran up to 4,800, and came down much more orderly than Bitcoin. They all came down, as we know, in the crypto world. But what's your take on Ethereum versus Bitcoin? As we're talking about safe havens and that sort of stuff.
You've got Bitcoin, it's blockchain, which is proof of work, and it works in its mind, in its own block. And then you have Ethereum, and Ethereum, it has ETH, which is its token, but it has a proof of work. It's a platform that developers can use. So you can use it as a developer to come up with new blockchain ideas, new tokens, and you can, also use it to get into the DeFi world. So it's got a lot more utility, and it's not just, they call it digital gold. This is more of a.
It's not just a punt vehicle, is what you're saying.
No, it's actually it's kind of like it's like a Windows or a platform for people to, like the internet, to communicate and connect. And the problem they've had is that the gas fees are super high, so it prohibits a lot of developers from being able to get into projects and afford it just because of the fees. And they're doing what they call the merge, which is where they're going to ETH 2.0, and that's where they're going to go to proof of stake, and that's going to help, number one, be able to start burning the ETH, so there's going to be less, which is going to create a higher demand with a higher price, or I guess the supply and demand algorithm there, just make it so it's going to be less, it's going to be more valuable because there'll be less of it, and the fees will be much more competitive because there's new companies coming out.
The fees are very, very high.
Yeah, they're extremely gas fees, and you have now Solana, you have Phantom, and some of these other ones that are out, and Cadena. Cadena has no gas fees or anything. So it's a competitive environment. There's brilliant people that are at the head of these companies. They're starting to integrate with the institution, investment banks, and the whole central banking and that system with all the CBDCs that are coming out. All this stuff is coming together because they don't know it. They don't know how to control it, and it's becoming a runaway train. As far as you had El Salvador, and then somebody just also announced that they're going to Bitcoin. You've got several other countries.
Well, so what's interesting when I look at these two charts, and I got them up here. So we got the weekly Bitcoin versus Ethereum. It's a lot of what you're saying there is. So the first thing I notice is that they had a similar moves. They pretty well replicate each other if you look at those moves, right, in the bigger picture. But what's really noticeable, if you notice that Ethereum hasn't got near the cloud, whereas Bitcoin got all the way to the cloud. So it tells us that, people are finding, if we talk about market psychology, more the punter and dribbler is going to be in Bitcoin, because the speculator, right? So you can see that because he's had to panic out of it. And then I'm going to, there's a reason I'm showing these two. And because I'm going to compare these to the SPOOs and NASDAQ in a minute, and the Russell.
Right.
And look at as we're talking, look at... Bitcoin got just whacked pretty good today. That's a $3,000 fall today. From the high to low, see that?
Yeah.
So that's a pretty
recent chart? Did you just pull this up right now?
Yeah. So that's the 60-minute Bitcoin, and that's and then I got the weekly and Bitcoin, Ethereum, just to show the difference on the cloud, to give you support versus it. But we just broke 41. We've been as low as 40,800. Ethereum's trading 3,044 right now, down $41. The day change.
So I guess to answer your question though, with ETH, there's a bright future with developers and a much broader use than Bitcoin. They have, just like Bitcoin, a huge following, kind of their own little cult, and the people that are doing ETH are just some of the best minds that are in the entire business.
Geez, that
and
sounds like doing a drug the way you say that.
No, but they've actually they've expanded their reach, so they're bridging. It's almost like becoming this like nexus of companies that are working together to develop a new Web 3.0.
Right.
They all do their own thing.
Yeah, I mean, so if we look at, so we compare them, you can compare Spurs and NASDAQ are kind of like that similar thing. You see the selling that came into, the more speculative it is, the more it got sold off. Like gold's holding up, as Madavi said, it's real. I'm not saying it's not. I don't want to sound like I'm saying it's not real. The Bitcoin, but it's tangible is probably what the word I'm looking for. Versus, say, some of these stocks. I mean, what did Peloton lose today? Was it about a quarter of its value? So about that, 20-odd%, right? 24%. Let me look. 24%.
It's 24.
Yeah, I mean, that's an impressive dump right there, right? And I noticed all 11 sectors, other than one, were up on the Spurs today. And the only one up was utilities. So that's a safe haven too. So people were rushing to put their money somewhere. And it's always funny when people go on about every bull, there's always money on the sidelines. Well, what about the bloody 10 to 1 and the 20 to 1 and 30 to 1 leverage? Because remember, the leverage from a lot of these people, and particularly the banks, are a lot more than the 4 to 1 you might be getting, right? So,
mate, remember in the last couple of years, we heard all these guys making millions of dollars.
I
gave them all a promise that I was going to take it all back.
Yeah,
so I
yeah,
made
yeah.
today and let them know I'm taking it all back.
Well, we are, yeah. So the point is that is not to be nasty there. It is. And I made a comment earlier that on the way up, you guys are just morons. You know, remember that? Everyone's making money. Like buying the $200, $400, whatever these stocks were. And what would happen? They would lever into it more and more. So just say you bought 1,000, Upstart at 1,000 at 100, so 100 grand's worth. All of a sudden it's worth 400 grand. So they would take that and lever into more and more stocks. So these losses become pretty massive, right? And that's why people get wiped out. And they're not they never take. So that's another thing. If you make money, I make a point. Madavi thinks I hide it under my mattress, but I make a point of taking money out all the time, every day. Sometimes take your money out. Make it real, and it's psychological. That's a big thing. Buy something with it, or keep it under your mattress, right? Or buy gold, like Madavi. That's what he does. There's a reason for that. It's a lot to do with psychological, and it helps you, right? Don't just put it on another red somewhere else. Make it tangible, because prepare yourself for the worst thing that happens. You know, we're not saying hole up in a ranch in the middle of Texas and buy 50 guns. 20 head of cattle. Geez, that sounds a little bit too close to... Anyway. But anyway, I think you get the point. We're just trying to really concentrate on the mental aspect and share that with us. I think by now you kind of know the trading system we use works. And looking at the numbers it watches, obviously it ain't sexy, right? But... that's why we hope you share and subscribe and all that, and perhaps you know you get something out of it. We hope you do. We get some nice messages, but obviously what we do ain't sexy, and I guess that's okay by us, right? What else was out today? I see CSX was out. They beat on revenue on that, but anyway, Netflix is a big one. So if let's look at one interesting thing I just want to point out. So the NASDAQ, we looked at Ethereum versus Bitcoin for a reason. We looked at NASDAQ for a reason, how that's already hitting its weekly 50. Spurs is lowering. So a normal correction, you heard Madavi mention this a few weeks ago, these markets haven't even pulled back 10%. And we think there's a lot of separate bear markets already been going on. So that's actually a good thing. A lot of the crap has been wiped out over time already, in the crap stocks, for want of a better word. Trash, whatever you call them. The S&P is still only down 7% from its high. So there is room, as we saw in that 50. That 50 is either going to come up and meet price, or price is going to go down and meet 50. That's just the way maths works, right? And a bear market is defined as 20% or more. I always thought it was it 20? I thought is that right, Madhavi? Did they say 20 or? I mean, that's what I just got sent a message. I asked a question to someone. So 20. Anyway, it gives you an idea. So 20 is 50%. 20% is a fifth of the market, is what I was trying to say. But if you're margining 4-1, that's 100%, right? It's gone. Because you got to extrapolate that little bit with the averaging and all that. But so
I always
that's
thought a bear market was a period of time. Is it not only?
No, it's price. That's price.
Yeah, the price falls for a sustained period.
Yeah, it's all to do with the price. Because and then it becomes, so you get, so I think you're right that there used to be an argument till the COVID thing happened and the market got destroyed and then they pumped all that money and it got it over real quick. Now, the last time we have seen selling like this is the coronavirus selling, right, when it first hit. And this time that's not unrelated because a lot of this selling has to do with Omicron. Because Omicron, they shut down the supply a little bit more. No one can get planes, slowed ships, all this sort of stuff. And then they got the fear going. Yeah, I mean, so it's not unrelated, all that. But somehow we think it's all better. At the end of the day, whether it is slowing everything down, people are getting sick. It's not decimating it's kind of like a bad cold. I mean, Johnny here's had it. But of course, there's someone who gets it a lot worse. So we don't want to belittle it. But what it does is it keeps people going to work, going to school, going to the shops. I mean, it's, so it's not, there isn't a fear factor that happened when it was more unknown. Now people know, right? But it's still there.
They just know that this one is manageable. They just don't know about the next one.
The trouble is we're running. The politicians are running this world by fear and blame and all this sort of stuff, which is the point we're trying to. Is the theme of today. And then what happens is everything goes to crap. And so if you're the bloke who paid $100 for Peloton, you put 1,000 shares in at $100,000 because you thought or you were told by a broker, an analyst, or some chat room that it was going to go to $1 million or whatever. What happened to those guys now? What happens in those Reddit rooms? What happens to those advisors that you pay 2% to or whatever, right? So it's about self-direction and getting your mind right. And sometimes, look, the best trade, you don't have to trade either. Some of the best trades you make are the ones you don't make. If you're not comfortable shorting, don't short. But it doesn't mean you got to buy. Wait, Or buy a put, that's going long. But anyway, all jokes aside, but there was lots of different things. We don't want to bore you with too many. That's all going to be on the website, all the stuff about what the markets did and who was down who and how much did that. We'll look at one ARK stock. What did Kathy do today? So there's two things with Kathy. I didn't agree with it, buying all her stuff, but they were all ideas, and that's the epitome of not her, but people believing it and pushing it to ridiculous levels. You put her in a position, she then became effectively a stock promoter by saying, hey, this is the way of the world. She's not telling you to pay $500 for 20, but she was paying it, right? She did sell some
what's funny is I went to my doctor the other day, and he said, this is the only time I'll see you from now on. You'll be on Teledoc, and he gave me a little handout on how to use Teledoc. So it's like those innovative stocks, they are really coming to the forefront, but it's the valuations, price, right? It's the whole thing that's going on. And investing in that stuff, when I got into it, it sounded like a great idea because I could get exposure without having to put myself at risk. But I just put myself at a huge risk.
Yeah. So that's the misconception, and I say many times I don't trust. Look, I've given fund and I've been, I don't know how many times. Oh, but you said, oh, I'm sorry. That's the answer you basically get. But the trouble with it, what hurt her more than anything was as they piled into it, it kept pushing it up higher and higher, and then she had to buy these stocks higher and higher. And so self-fulfilling prophecy up, self-fulfilling prophecy down, right? So understand a lot of these different things. And then just the way of the word, right? A lot of people are really bearish markets because they didn't partake in the upswing. Don't be that guy that just hates on people. You never want to be that guy. And a lot of people, when it was going up, made fun of the bear who didn't want to take those risks. Don't be that guy either. Guess what? The Lord works in mysterious ways, right? And it all comes back to equilibrium, as Gann would say, the harmony of the markets. And that's what happens. So the fear of missing out gets you both ways, right? So just it's greed and fear and keeping up with the Joneses and all that. Worry about if your kids are fed, your dogs are fed, and all that sort of stuff, right? If you got a cat, well, I guess feed that too. I'm only joking. That was a dog owner's joke. But anyway, it was a pretty good day. You see all those levels. Go through the charts that we shared with you. And you can see it's not all magic. It's just all probability. And understanding the herd and the motive. And the reason we use things like look at stuff like Elliott Wave and just parts of it is we want to get what the herd's doing so we can kind of not get caught. You want to be in the C wave the right way, basically. You want to be and you want to extrapolate what's going on and you want to respect the recalculation and stuff like that on Murray, And I said a long time ago, didn't I, Johnny? Don't play with stuff you don't know. Like Ichimoku, understand what it really means, what it all gets there. There's people get around on that sort of stuff thinking they understand it. And then they'll fit on different time frames. And you'll see that like fiddling with different moving averages. Stick to what's consistent. Or just fiddling with anything. There's some good theories out there, but be consistent and appreciate them. Don't form fit a technical analysis theory just to suit an existing view or an opinion you have of something. That is, and then you'll either get an analysis paralysis, where you're looking at too much stuff, or you'll just find something that fits your view, right? But anyway, but it's a good chat on all that stuff. We did go on and we just wanted to drum in a few points, I guess, because it does sadden me when I see people get taken for a ride or lose everything or, So that's all from me. Anything else, guys, you want to share? Nice work, everyone, today.
Yeah. Let's hope the keeps coming in, whether the market goes up or down.
Right. So, just imagine if you want to look at what happens tomorrow. There's a lot of talk out there of flash crashes, of wipeouts. Generally, when that's been talked about, it doesn't happen. But always be respectful of that. Look at those levels, right? And so don't forget, every fall for like 4 months, it's the end of the world, right? So keep that in mind. And so those bears that are like that, they always come out when it's thingo. So the same thing with the bulls. Whenever you get to buy the dip, I don't know how many messages I got when one of those big runs off a couple of guys, just lauding how they made the bottom, made all this money, and guess what? I haven't heard from them this time. So they've either got wiped, or they're holding on to these, or they didn't do the bloody trade. So who knows? Be doubtful of what a lot of people say they do too, especially on Twitter, because you can delete your wrong tweet, right? Your wrong thing. Or Facebook or wherever you bloody hang out on this stuff, We're in our own little metaverse here, aren't we?
I'm gonna upload myself up there. Live for 10,000 years or more.
But anyway, nice job, everyone. What do we got tomorrow? Let me see. Where's that bloke sends me stuff? Hang on. I should look at it, right? So lots of earnings. Another week gone by. We got a lot of options rolling off tomorrow, it's Friday. So there's a lot rolling off and massive gamma that's lost money of calls. But the guys that sold those calls made money unless they just sold the calls. So here's the other thing. Everyone thinks it's a zero-sum game. It ain't exactly in options, right? A lot of puts are bought to hedge an existing stock. Or a lot of calls are sold to get some premium against the stock. The underlying, they're losing money on in a lot of those cases, right? So it's not a zero-sum game like futures or something. Anyway, tomorrow we do have... What do we have? So here's something that a lot of bond traders are talking about. So and I'll just share with you. So if the Fed comes out and raises rates at the short end, because that's what they do, right? At the front end, like 0 days, and then rates go down at the long end in after that, like just a little bit. In other words, the curve flattens. That would actually be the bond market giving a vote of confidence to the Fed and their ability to get inflation under control, because it's not an easy thing, and that's why they put it off. Everyone laughs at the transitory, but they obviously didn't know Omicron was going to come around, right? To start with. They didn't know you're going to have these policies of like the US government with oil and gas, for example. They didn't know that with all that badness. They suspected, but they couldn't talk about it at their cocktail parties in New York. Hey, maybe if it gets really cold, we're not going to have enough of this yet. So they did all that stuff which they can't talk about, right? We understand that. They can't talk about that. But he's got to balance all that out without not going up too fast and crashing everything. And I don't just mean the market, I mean jobs, and all that will happen. It's all confidence, as Bernanke used to say. So at the end of the day, if they can get that curve to come down, the bond market's saying, you know what? You can get inflation down, or at least control it. Right now, you saw, what was that number in Germany? Like some crazy number, like 24% PPI or something. Highest since the Second World War. You know, when they started counting about it. And that's a big deal for Germany. They're very, very cognizant of the Weimar Empire and what that did when money became nothing. And that led to the Second World War. Interesting times, right? That happened. And tomorrow we got... where's the list of what we got? Every second comment seems to be about Peloton. Geez, the chip makers did get whacked, didn't they? Yes, they did. Most earnings are out. The earnings I know I'll be watching tomorrow, and people in the oil and gas industry will be Schlumberger. Schlumberger and Halliburton are the two biggest service companies in the world. Halliburton usually comes out a few days after that, so we'll be looking for that next week. Yeah, so all we got out tomorrow is the conference board's leading economic indicators, which I don't think a lot of people pay much attention. So as far as the year 2022, NASDAQ is down 9.5%. We are at January the 20th. We are down 9.5%, boys. The Russell is down 9.9%. The SPOOS is down 6%. And the Dow is down 4.5%. So I think we're down over 10% from the highs on NASDAQ, right? And probably on Russell too. Anything else, people? We want to share?
No.
We all good?
Goody.
Well, thanks everyone. Have a good sleep. Hopefully we got you some good ideas and thoughts there and understanding what goes through our little minds. And a lot of people similar to us. Make sure you like and subscribe, share it, share any comments. Hit us up on Twitter, on Traders.com, Meta Johnny #1, and Madavi #4. And we will see you all on the weekend. It is freezing cold here, and you're going to laugh what I call freezing if you're living in Canada or in Ukraine. I guess you got other things to worry about if you're in Kiev. But anyway, we will see you tomorrow. What do you always say, Madavi?
Always be killing it.
Exactly. See you in the metaverse, Johnny. I'm on flight 67.